Take a look when you Google, what is the average return of the stock market? You can see in these Google searches, it lists that the stock market averages 10% or more. What is average return? Average return is adding up all the annual returns and dividing by the number of years. This is a simple average number. It does not represent a real return. Average return is not a real return. Now we'll show you how they come up with average return, or as we call it, Wall Street math. Is a 25% average return for a 2-year period a good return? The answer is no. Let's have some fun here. Let's show people the Wall Street math. Let's show how they create high average returns. You can use Benjamins. I chose Benjamins here because I think it's kind of fun, or $1 bills. And the $1 bill or the Benjamin will represent a $100,000 stock portfolio. If it increases in the first year 100%, goes from $100,000 to $200,000, and in the second year it decreases only 50%, it'll go from $200,000 back to $100,000. How much do you have? You have $100,000. It started at $100,000 and ended at $100,000. That's the concept. The real return was zero, but the average return was 25% for this 2-year period. Wall Street math. Using Wall Street math, the average return of 100% increase plus a decrease of 50% divided by 2 years equals an average return of 25%. Now you and I know that if your stock account started at $100,000 and then went up to $200,000 and then went back down to $100,000, you had no return. But if you use Wall Street math or average return, your average return was 25%. This is how Wall Street can create high historic returns that do not really exist. Here's another example of Wall Street math. They can create a 10% average return by adding the 100% increase plus a decrease of 50% with no increase for the next 3 years, divided by 5 years equals an average return of 10%. If we take the percentage number of 50% and divide it by the 5-year period, you get 10%. This is how they come up with an average return of 10%. This is what we call Wall Street math. Here, using Wall Street math, the average return was 10% when the real return was only 0. How does Wall Street create an even higher average return? They count 100% of the dividend income. This free booklet entitled The 10 Main Reasons Why Most Stock Investors Fail When Saving for Retirement will be eye-opening as to the risks of investing in the stock market for retirement. Please click the link below for the free booklet to learn why investing in the stock market may not work out for your retirement. If you're a real estate agent ready to level up your business, boost your income, and stand out as a true professional, it's time to become a certified wealth agent. Take our certified wealth agent training and get your new designation at wealthagent.com and become part of a movement of elite professionals showing clients how to retire early with less money invested. Don't just sell real estate, transform lives and dominate your market. If you would like to find out how to retire early with less money invested through real estate, or would like a second opinion on your current retirement plan, we're here to help. Visit wealthagent.com to schedule your complimentary consultation today. Dream bigger, retire sooner. Your new path begins now. Please go to wealthagent.com to learn more. And thank you for watching. I'll see you in the next video.